Welcome to another market update. Today we have a lot to talk about. Coinbase COO had an interview with Bloomberg and addressed a few things. One, the revenue or lack of revenue that they had this past quarter, the insider trading, the partnership with Blackrock, and a few other things. On top of that, the CPI came out, which affected the markets pretty well, but need to be aware of a few things. In addition, Ripple is looking to buy some more assets from Celsius, so we're going to touch on that. Let's get into it. So total market cap for today is $1.1 trillion. Extremely good. Total volume is $83.8 billion. Now that's a lot, and it's due to the CPI report, which brings me to the bubbles. We are in the green. Everything is looking up as of now, but will it last? So let's go ahead and touch on Coinbase. Coinbase came out and reported a $1.1 billion of net loss, whereas last year in the same quarter they had a $1.59 billion in net income. Now they also estimated that they would lose $2.65 per share, but instead lost damn near $5. Their revenue came in at $808 million as opposed to what they expected to be as $832 million. Now they came out and said Q2 was a test of durability for crypto companies and a complex quarter overall. I think it is very important that we understand the reason the revenue declined is because right here, 64% decline because investors exited the crypto market. Retail transaction revenue came in down 66%. Now this is one of the main ways that Coinbase gets their money. And we have COO Emily Choi actually came out and did a interview with Bloomberg where she talked about this, and here's what she had to say.
So one is our core retail customer is somewhat sitting on the sidelines in this type of a turbulent market. And we've seen that in past cycles. What happens is they want to sit it out, they want to hodl for a little bit, and then they come back on and they'll engage with certain features such as staking and other things.
I think it's extremely important to note that this is why they don't have a lot of transaction revenue, because total assets on the platform itself fell from 256 billion to 96 billion. And again, that is because people are scared. If we look at the fear greed index, we are sitting at a 31. And this is historically, as Bitcoin was going up, we were in euphoria. We were in the 90s, green. Got a little bit of a correction, and then we started to go back up. People started getting greedy, and then we've just been getting dumped on ever since. As you could tell, we are still in the red. We have been as low as 9. I've seen it as 9. So people are extremely scared to enter the market right now, which is why they don't have as much transactions, especially people who trade more of mainstream coins, top 100 coins, are going to go to Coinbase as opposed to KuCoin, Gate.io, or even DEXs. She then goes on to say how Coinbase has been around for 4 full cycles and that they are more or less looking at the long term and have been stockpiling since. As a matter of fact, the CFO of Coinbase came out and said they have stockpiled billions to prepare for the crypto winter. They stockpiled around $4 billion in cash to prepare for the regulatory crackdown of the so-called winter. Something else that was mentioned was the SEC launched inquiries on 9 tokens saying that they were securities. These tokens that Coinbase was offering, she then goes on to say that they spend a lot of money to make sure that they are well within the guidelines, and they are extremely open to dialogue with the SEC and other lawmakers so that they can come and agree on a sensible framework for crypto regulation. They then went on to talk about all the FUD that Coinbase has been going through with the insider trading. There was 3 people charged in a conspiracy for insider trading. She came out and said that they don't condone front running at all and that they've been more than willing to work with the SEC. But in turn, that is when the SEC cracked down on the 9 tokens. The SEC won't miss an opportunity to try and make some money. And then despite through all of the FUD, something that they do go on to talk about that I think just completely trumps everything that we've been talking about with Coinbase is their partnership with Blackrock. Here's Emily Choi talking about Blackrock.
Partnerships and what kind of partnerships?
Yeah, Emily, I have wanted to do that Blackrock partnership since the day I joined Coinbase. And to be totally honest, we wouldn't have been ready for it back when I first joined because we didn't have everything in place that we needed to in terms of the product suite and the compliance and everything that we needed. And Blackrock wouldn't have been ready because their institutional customers weren't necessarily demanding crypto as a new form of asset class. It was kind of an idea.
Investors weren't ready to accept crypto as a new form of asset class. So we are about to see huge amounts of money come into crypto, but not before they get their cut. They are spreading fear, uncertainty, and doubt into the market so they can get their cut. They are saying crypto is dangerous. So if you don't know who BlackRock is, BlackRock and Vanguard practically run the world. Here's a tweet that I saw of all of the companies that are owned by BlackRock, or at least they have a controlling interest in, to include Amazon, Microsoft, PayPal, Walmart, Facebook, Ford, Netflix, Tesla, Pfizer, CNN, Boeing. I could go on forever and ever. This is the top company. And then we had a tweet from the vice president of BlackRock and said, what this space needs is a decoupling from the meme coins and those with long-term utility use cases that will disrupt many industries. In order for this space to grow and mature, Quant, AVAX, ETH, XTC, XRP, and many promising projects waiting to take the crypto market by storm. XRP. Now, I know a lot of you think that XRP is worth nothing because the price action doesn't really support all of the claims, but they have been making a lot of moves. Speaking of XRP and Ripple is exploring to buy out a lot of Celsius assets and actively looking for opportunities to carry out mergers and acquisitions that will strategically scale the company. They are wanting to take a look at Celsius's vault to see what they want to buy. Ripple, XRP, HBAR, this is where the money is at. You see it everywhere, but there's no price action, and people in crypto are extremely impatient. So let's get down to the brass tacks of what's going on today with the pumps. Now let's get down to the main thing. Consumer Price Index, the CPI, came out, and it shows that we are 0% from last month. So we are technically dead even. It's not amazing news, but it is great news. They estimated 8.7% inflation for this month, but it's actually 8.5, down from 9.1. Now, yes, this is a lot better, but this still is significantly high inflation. I think we need to keep that in mind. As you can see here, it's 8.5, and then core, which is without the food and energy because those are really volatile for those of you who aren't tracking, it was a 5.9%. This immediately had an effect on Bitcoin as Bitcoin shot up from 23,000 all the way to 24,100, and it is sitting currently at 24,000. It's been consolidating a little bit. At the same time, the dollar currency index immediately went straight down, went from 106 all the way down to 104. It's sitting roughly at 105, and this has caused investors to shift their wealth into crypto assets and stock market assets because the dollar isn't doing so good. So they want to be able to protect their wealth and their profits. I think the main takeaway from this is even though inflation is lower than what we expected, it's still significantly high. So be cautious. The Fed said that by the end of 2022 or 2023, they expect us to be around 3.5%. They have not pivoted on their position yet. However, keep an eye out. There's still a lot of macro things going on right now, but don't FOMO and chase green candles. Do not do that. And lastly, when we're talking about Coinbase, two things from this. One, Coinbase isn't going anywhere. They just landed a huge partnership. And two, we're about to get a lot of money, a lot of institutional money, especially with BlackRock now putting those pieces into play. So just be cautious, do your research, practice good risk management. Have a good one.